Hello and welcome to the December monthly multifamily update. This month I'll be talking about sales, what's happening with them, and the ones that are not closing. On our first slide, we look at the absorption rate. Historically speaking for the market, absorption rate's around 30%. That's properties that come to market, how many go under contract. As you can see, in Q1 there was a robust absorption rate, over 60%, but when interest rates were adjusted at the Fed level, you could see a massive decline in how many apartment transactions were absorbed. Looking more specifically at transactions our team has brought to market, you can see a rapid decline in interest from Q1 to Q2. The important metrics we track are confidentiality agreements signed. This is people that are underwriting the investment property, the number of tours, so how many have enough interest after underwriting to tour the property, and then the number of offers after they've toured. The adjustment in interest between Q1 and Q2 was very steep, but there's been a strong recovery in Q3, and we're putting a lot of sales under contract with more offers now than we saw in the first quarter of this year. This graph tracks the sale price compared to the listing price. Typically, sale prices trail the market because owners want to push pricing and price a little bit above what they'd expect to achieve. The largest decline we saw was during the pandemic. Buyers found it very difficult to achieve the sales price that sellers were expecting. However, since then, we still remain in that 2 to 4% within asking price in the region. Looking more specifically at the listings our team has brought to market and sold, you can see in Q1 we had a great closing ratio of 93% within 2% of asking price. The closing ratio dropped down to just 20% in Q2 as buyers and sellers figured out what market pricing was, but the great news is we've seen that ratio tick back up close to 50%, which is close to market in Q3. I've put together some insights if you're considering selling in 2023. First, if your loan is maturing in the next 24 months, the conversation starts now, whether you do refinance or sell the property. Assumable debt is in high demand, and we can do free valuation for you to see if you're at or above what you thought your property would be worth due to a great in-place loan. Cash flow matters again. Whether you plan to sell or hold your property, having good in-place income is mandatory for a good property valuation. And if you're considering buying in 2023, my takeaways are offer. Look at properties, underwrite them, and make offers where they make sense for you. We think that the urban core like Seattle has more upside than the suburbs that got inflated during the pandemic. And lastly, pick a price per unit, price per foot that you'd be happy to own and make that offer. The cash flow might not make sense in the short term, but we're betting on the market and think Seattle will do exceedingly well in the coming months and years. Thank you.